Many of you are surely wondering why I have summoned you at this hour.
It's time for the big interview.
All right, boys, prepare to be dazzled.
That's right, it's big. It's the big names, the big news, the biggest stories. It's the next big thing. What's the big deal? It's the big interview.
What's going on here? This is big news. We need coverage of this.
Money Life brings you the big thinkers, the top experts, the brightest minds. With the big interview, you can stay informed about all the financial matters that are important to you, all in one big package.
Oh boy, I've never gotten a package this big. I've always wanted to have a huge package.
Did my taxes pay for this?
The big interview. Sit down, strap yourself in, and get ready to learn.
Your mind is beginning to work. It's entirely due to my influence, of course. You mustn't take any credit.
Well, today we're going to try to see if we can't get your mind working around inflation and how you might protect yourself from it, and whether or not you're better off doing it with gold or rare coins. My guest is David Beahm. He is the president and chief executive officer at Blanchard and Company in New Orleans. And they recently issued a statement a paper that talks about some of these things. If you want to get more information, it's blanchardgold.com. And you shouldn't be surprised if you hear David, perhaps not quite in these tones, but you should not be surprised if he acts this way.
I love gold.
Because Blanchard and Company is one of the biggest retailers of precious metals and rare coins in the country. David Beahm, welcome back to Money Life.
Thanks, Chuck. Thanks for having me.
So we are living in times that probably should be pretty good for your business right now because, well, a brand new president who has said a lot of things that lead us to believe that we're going to see inflation increasing. In fact, we're going to see it increasing faster than the Fed has generally forecast. And gold, of course, is traditionally the hedge that people use for inflation. But you're suggesting that rather than using gold, you'd rather use rare coins. Why?
Well, actually, what we really want our clients to know and other people that are worried about inflation is to realize that having both gold and rare coins is the proper way to diversify. And so when a client calls us up, they want to buy gold, they want to diversify out of paper assets, get some money out of the stock market, maybe 10 or 15% or so. Once they buy gold, then we explain to them the value of rare coins. And we've got plenty of research that shows that portfolios that contain at least some gold and some rare coins actually outperform those. In particular, during times of inflation, portfolios with rare coins not only provides a good hedge against inflation, but they typically outperform portfolios that don't have rare coins in them.
It obviously means that we're looking at rare coins not for their gold value. We're looking at them as an investment, basically a collectible investment. And where gold, you can see relationships to inflation, collectibles in general are not necessarily tied to almost anything, right?
That's correct. It's tied to supply and demand. It's tied to the rarity, how many coins are out there, how many were minted versus how many actually survived the gold confiscation in 1933, and condition. We have third-party grading services that actually look at coins and they scale them on a 0 to 70 scale, 70 being the best, 0 being just a piece of metal where you can't make out any of the art on the coin. So, yeah, while it's not tied necessarily to the price of gold, which fluctuates all day long, there's certainly avenues where you can make sure that you're buying the exact rare coin that you want and see the pricing and make sure that it actually is a good buy.
But what you don't have with that is the liquidity that you get with gold. Gold, even if I'm buying it and holding the metal myself, there's always a ready-made market that has a clear price that I can decide it's a good time to sell or it's a good time to buy. And then I have the option of using ETFs and traditional mutual funds and holding it in a bunch of different ways. With a rare coin, I've got dealer risk and a whole bunch of other factors, and I'm lacking liquidity. How do you guard against that in a time like this if somebody's going to rare coins because they're worried about inflation? You'd think they'd want liquidity.
You're right, and liquidity, that's a little bit misguided. In our market, there is liquidity for rare coins, so whatever Blanchard sells, Blanchard will buy back. So it creates just the amount of liquidity as gold. So any investor that's worried about being able to actually sell a coin once they acquire it and they're ready to liquidate it, they can have confidence that when they call us, they can get liquidity quickly.
but at what sort of price, in what kind of conditions? I mean, that does have an impact here. So how does that work?
Basically, just like any other asset, it fluctuates, whatever the price is at the current market value. We have the top numismatist in the country that works for Blanchard, and he's pretty much the go-to guy, the guru, if you will. And he looks at the assets and he values them, and then he is the one that determines what the prices that we will buy back for.
Whenever I do an interview about collectibles, I always talk about things like dealer risk. But there's another side here as well. When somebody who listens to this show wants to be a stock investor, they can read lots of books and get educated on the market and get an idea, and they're looking at a liquid market that's easy to understand, etc. When they're looking at coins, well, they can read the books, they can get an idea, but there also is this, it's so pretty, and it's so nice, or it's so historic, etc. How does somebody balance that off? Because if they're going to be using coins the way you're suggesting, they don't want to have emotion any more than they want to have it in the stock market.
Well, we have different types of people that buy from us. We have the investor who is looking to just buy a widget and make money at the end of its life cycle. We also have collectors who do buy for, as you suggested, the romance, the story, the historical. But just like a piece of art, when they actually go to sell it, they want it to be worth more than what they buy it for. So in the end game, no matter who's buying this asset that we have, this rare coin, they all have the same objective, and that is to make money after. We've been around since the 1970s, and so we are the rare coin market. We have the most experience. We have the portfolio managers that have been here the longest, the most educated. It is a mysterious type of asset. People don't know about it. People shy away from it because they just don't understand it. If they just take the time, like you said, read a little bit about it, talk to a dealer like us who's been in the business for 30-plus years, they can get comfortable with not just buying gold, but also further diversifying into the rare coin market.
That said, rare coins are an alternative asset, and you're suggesting they're, of course, an alternative asset class to gold. Alternatives, well, technically, it's anything that's not stocks, bonds, and cash. And although alternatives are very mainstream these days, it's the buzzword in the mutual fund and financial services industry, it still is something that most people say, maybe 25% of a portfolio in alternatives. Of that, well, you're suggesting people allocate some to gold and some to rare coins, etc. So how much of a portfolio are we allowing rare coins to be for somebody who does this?
It's really a comfort level. I think that an investor should have between 10 and 15% in an allocation of gold and rare coins. Back in 2008, clients that actually have exposure to gold and rare coins obviously did better than those that just had stocks. But they complement one another. So while they're both, or rare coins are considered an alternative asset, it's just a further diversification into the gold asset class.
And that being the case, when people seriously invest in gold, well, there's a storage issue. There's a, who's going to keep it, etc. Should they be thinking, hey, yes, I'm investing in rare coins, but I'm investing them, so I'm going to have them in a vault somewhere as opposed to in my nightstand?
You would. We sell rare coins that are as low as $20, and we've also placed a coin that is as high as $7 million. So obviously you're going to want to protect this just like you would protect your other hard assets by putting them in a bank vault or putting them in a home safe. But basically the goal is to acquire these coins. We know that we're going to have inflation down the road. We know that that the new president's policies are inflationary. We know that the velocity of money, which is at all-time lows, is going to start picking up, creating inflation. We have to grow the economy. That creates inflation. And rare coins and gold absolutely will help protect portfolios that will be exposed to the inflationary risk. And you should be holding them in some sort of secure location.
In fact, we've had a couple of people on who, when they've talked about gold, have certainly made it seem, if not have actually suggested, that gold right now, beyond its value as a hedge for inflation, is a worthwhile speculation that because of more recent price actions and things that had happened, there's a real reason beyond, yes, you should hold gold and you should hold it in inflationary times, that you might consider speculating on gold as well right now, whether you do that through mining stocks or what have you. Do you believe as well that this would be a time where beyond the, hey, we expect rising inflation, that the gold market right now is sort of priced for perfection?
It does to me. We had 12 straight years of gold increasing. In the past few years, gold has either fallen or remained flat. But we do think that the prices that we're seeing now, which is a little over $1,200, is on the low side. If you recall, we got all the way up to just under $1,900 a few years back. So we do think that gold has some room to go. We're already up over 5% this year. We see some of the policies that are being talked about. And again, not just inflation, but just the economic uncertainty of not just the United States, but also all over the globe certainly should have prudent investors looking at gold as an asset class.
Well, David, really interesting stuff. Thanks so much for taking time out to join me to discuss it on Money Life.
Great. Thanks, Chuck.
David Beahm is the president and chief executive officer at Blanchard & Company. They are one of the largest retailers of gold and precious metals and rare coins. And if you want more information, you can go to BlanchardGold.com. And as long as you're looking at Blanchard Gold, remember they are on Twitter at Blanchard Gold. All right, we just hit the halfway pole on the January 25th edition of Money Life. Up next, collective wisdom from Hightower's Global Investment Solutions. Matthias Kuhlme and friends will be here just a moment. And then Mark Sausinger from the No Load Fund Investor will be here for the Money Life Market Call. So stay tuned. We're living the Money Life, and we'll be back to it in just a moment.